In a nutshell, your profit and loss report is the sum of your income less your expenses, and this gives you your profit. This is for a given period of time. But it's actually also a little bit more than that. Take for example here, we have a more detailed profit and loss. This is what you're more likely to encounter in a business. But what exactly does every item mean? Your sales income is simply any source of income which relates to the trading activity of your business. Your cost of sales are costs which directly relate to your sales income. These are variable as they change with the level of sales. The result of your sales less your cost of sales will give you your gross profit or your margin. You may also have other income sources. These don't relate to trading activity. And of course, you'll have additional costs, but these may not directly relate to a sale. These are referred to as overheads, and these are generally fixed. The result of all of your income, less all of your expenses, will give you your net profit. Let's set the story of how you might first encounter your transactions in your profit and loss. So if you're a new business, you may be likely to apply for grant funding initially. For those of you who haven't met him, this is Paul. He's going to be our new business startup. So he applies for government funding, and he receives this in the form of a grant. This will be reflected as other income, simply because it doesn't relate to any actual trading activity, but it's still an income to his business. Now Paul can set out on his heart's desire. He absolutely loves to dance. So selling performances will be his main form of income. This will be his trading activity, because every performance he makes will be directly related to his trade. As his performances become bigger and grander, he may decide to hire in additional dancers. These will be referred to as his cost of sales, because they're directly affected by his volume in sales. As his performances grow larger and larger, he may also hire in even more additional dancers. So they're a direct impact of his sales and how his sales are performing. The net result of your sales income less your cost of sales will equal your gross profit. This is essentially the margin you're making on your sales. But he may also have other additional costs as well, such as lighting his stage so his audience can actually see. Now at the end of each performance, the utility company will charge him exactly the same amount for his lighting, regardless of how many people show up. Even if he's only got one person watching, or a room that's completely filled out. It doesn't matter to the utility company, because they're not affected by his audience size. This is referred to as an overhead. You may also hear of this referred to as a fixed cost. They're generally not affected by the volume of sales. As mentioned before, the overall result of all your income, less all of your expenses, will give you your overall profit, which may be referred to as operating profit or net profit.